Yes, this is CFRA, Sam Stovall with us from Pennsylvania. Welcome to FX TV in Turkey. It's a great and very hectic time to decide whether to invest, whether not to invest. You are one of the well-known strategists in Turkey because you are with us. Please tell me the way that you are thinking about investment. What is the main theme?
Meaning, should they sell their stock holdings because they're worried about a bear market and recession around the corner, or because most of the uncertainty has already been factored into stock prices, that now is the time to be buying? I still think that there are challenges ahead as it relates to the geopolitical situation in Ukraine, as well as what the Fed is likely to do at its mid-March meeting. So one thing is certain, and that is that volatility will remain elevated.
Okay. As long as the politics is concerned, what is the next episode of this political problem? I mean, for example, if China decides to invade Taiwan or something like that, or this is just a story just speculated by the markets?
It is markets because China has mentioned that it does feel that Taiwan is a part of mainland China. And so because of the situation in Ukraine, the worry is that that could give China an increased reason to invade Taiwan. At this point, we don't think that that is a likelihood, but it is a situation that has increased in probability since the Russian invasion of Ukraine. Also, we see that North Korea has sent up several more test rockets. So we just find that there's an awful lot of uncertainty from a geopolitical perspective around the globe.
Okay. One or another, I think there will be more volatility in terms of geographical problems. The other one is the policy making or the interest rate decisions of the MPC. What are you expecting to see from the Fed side?
Well, I expect to see a 0.25% rate increase, so a 25 basis point rate hike when they meet in the middle of March. We have had 5 rate tightening cycles since 1990, and every one of them has started with a 25 basis point increase. The Fed likes to start slowly. They tend to then increase rates by 25 basis points at the second meeting, third meeting, and it's usually at the fourth meeting or so that if they feel they need to speed things up, then they raise rates by 50 or 75 basis points. So our belief is that they will have 3 25 basis point increases by mid-year, and then possibly 2 more by the end of this year, so 5 in total. But we don't see a 50 basis point hike initially, and we don't think that they will need to go 7 this year, as some strategists are calling for.
Okay. As far as I know, areas like those inflation expectations are rising. It's not bad for the stock market, as far as I know. But on the other hand, there is the liquidity, which will be, vacuumed by the Fed on the other side. What is going to be the impact as long as the global stock markets are concerned? Do you expect to see a decoupling between developed markets or developing markets?
Well, I think first off, that's a multiple part question, but in terms of inflation, that is certainly a concern for investors today for CPI. We're only going to be getting the February data this coming week, in which we're likely to see 7.8% year-on-year increase, but that will come up to an 8.0% year-on-year rise with the March data. So that is a concern because there is a direct correlation between inflation and interest rates. If you take a look at the 1970s, we started that decade at a 5.4% year-on-year rise in inflation and ended the decade at 12.4. And for that whole 10-year period, we only posted a compound annual growth rate of 1.5% for the S&P 500. So higher inflation leads to higher interest rates, which then leads to lower stock prices. In terms of what might be more adversely affected, our belief is that we probably will see more pressure from the emerging market side than we will on the developed side, at least as it relates to interest rates. Our expectation is from a global GDP perspective that emerging countries could see about a 4.4% GDP rise in 2022, but that's down sharply from the 6.4% rise that we saw in 2021.
What about China? How is China economy performing?
China's economy is doing very well, up 8.1% in 2021 and expected to be up 4.5% in 2022. So it's still one of the stronger economies out there. And recently, China had indicated that its goal is for a 5.5% increase in GDP this year. So still, China is a strong economy, but certainly not as strong as it has been in past many years.
What about the US? Because I'm asking this question because most of the people think that the real conflict is not just between US and Russia or US, Ukraine between Russia, but one of the biggest challenging economy, challenging the US economy is China at the same time. How is US performing, and what is going to be the impact of this kind of, geographical problems over US economy, China economy, and of course the global economy?
Well, we have certainly seen a reduction in expectations for the global economy. At the beginning of the year, it was expected that we would see a 5.5% rise in GDP in 2022. Now that number is closer to 4.1%. So certainly expectations are for weaker economic growth across the globe. The biggest declines are likely to occur in the advanced economies. We were likely to see about a 4.3% gain, now looking for 3.7%. I think that the real worry that investors have around the globe is, will the U.S. be losing its military might, if you will, or its geopolitical standings if we don't, in a sense, stand up to the bullies around the world? Does that mean that we lose our stature in terms of defending our NATO alliances? So I think that the U.S. is obviously playing it very carefully because we are dealing with two superpowers with nuclear capabilities. So trying to assist the Ukrainians through pretty creative measures, financially in particular, but also by sending MiGs from Poland to Ukraine in order to fight the Russians on their own. So it looks as if the longer that the Ukrainians can hold out, and because of the impressive uniform response by the Western world, I think that has caused people to feel a little bit better about how the U.S. can lead such a coalition. Okay.
Turkey is one of the most important ally. I don't know if it's still so like that, but correct me if I'm wrong, but your ex-president Trump sent a clear message, with or without me. I think it's still on the desk that it's clear that you should have to decide whether you are with the NATO allies or without them. Do you think that Turkey might be or loser or winner in terms of investment? Because, if NATO or US want to send a clear message to the bullies, it means that you have to be with your allies. And one of the most suffered I mean, country is Turkey in terms of tourism, in terms of FX market, in terms of energy prices, in terms of grain, buying from abroad. Do you think that this kind of, problem has a very, very different meaning for Turkey or the investment in Turkey?
Well, I think that certainly you cannot look toward the prior president. You have to look exclusively at the current president, the current administration, and the current policies. And I think that not being a political expert, that the U.S.'s stance is one of embrace, accepting the members who want to work with the United States. But I don't think it is a binary situation where you're either with us or you're against us. I think the U.S. is simply trying to put together a coalition to help stave off the Russian invasion of Ukraine. But I think that we all realize how important the trading partners are around the globe, and we would rather have that continue and actually increase rather than trying to set up walls between ourselves and other trading nations.
Okay, as the last question, what I understand is that it's going to have some more time to settle down this kind of conflicts between countries, Russia, Ukraine, China, and others. But on the other hand, all the global economy will suffer. Growth rate will diminish, and inflation is going to be still high. What do you recommend your investors to invest in order to keep their savings against the inflation?
Well, the first thing that they should do is to protect their portfolios from their own emotions, because it's usually the worst time when investors feel the most panic. That over the long term, the best investment out there to beat both inflation and taxes is stocks. So typically, you're better off looking for reasons to buy stocks at depressed prices than you are to sell your stocks at these depressed prices. Especially if you happen to be somebody who's approaching retirement, you want to be focusing on those companies that now are offering a very attractive dividend yield because of the lower prices. Think like a landlord, not like a trader. Focus on dividend yields as if they were tenants within your rental apartments. Look for those that consistently pay a good dividend and have no problem with annual increases. So like a tenant, make sure that they continue to pay and they don't want to leave should you want to raise their rent. So same goes for the stock prices. Look for those that represent a good opportunity now that prices have come down so much.
Okay. Would you like to say your best wishes to son-in-law? Am I right?
Yes, my best wishes to my daughter Sarah and her new husband Togahan Vahaplar.
Okay. We call them relatives in Turkey. You are now one from us.
Well, good. I'm glad. Thank you.
Thank you very much indeed. Thank you for joining us.
All right. Reach out anytime.
Thank you.
All right. Bye.